Alrighty then. All right, I think we're on. Yes, here we go. We're in the Creed shirt. Never Die is one of the songs that they made and still sing on tour. And this market will never die. Today we had Powell. Obviously, his big speech this morning. The time for interest rates has come. That is basically the summary of that story. Let's see what really moved after. It's always curious. I'm always interested to know exactly what moves after and by what margin, especially where it lines up with our targets and projections, right, of where the market's going. So today, home construction, emerging market bonds, right? Of course, when the United States, Federal Reserve is going to cut rates, it's going to mean something on lending globally. And of course, it had an effect on home construction prospects and regional banks and what it costs for them, what they could bring in on that interest level in terms of the margin and profitability. So all those ripped on a multiple sigma level post Powell's Jackson Hole speech. Financials, the equal weight S&P, which is what you want to see if you own stocks, period. Industrials and healthcare. Healthcare has been chugging along. Those all traded to new all-time highs today. So there's lots of companies, the ones that JP Morgan, AstraZeneca, all-time highs today. Never worth more than they are at this very moment at the close. All right. We'll go into these moves one by one. The big moves up today was home construction, emerging market bonds, regional banks, uranium. I've been wanting to look at uranium since we gave it a month. I remember the date was, I believe, August 18th. It had till to maintain its 200-day moving average. Let's see where it is. And then real estate, the emerging market bonds hit a 52-week high today, which means highest in price, which means lowest in yield. So they're loving that the cuts are coming, most likely 25 basis points, September 18th, or about 4 weeks away. And then real estate hit 52-week highs. Depends what ETF you're in, but VNQ, IYR, XLRE, I think a lot of them hit 52-week highs today. Very bullish on, obviously real estate cuts is a big thing, and the dollar had a big slip today. We'll take a look at that. It's had a nasty week. We'll take a look. So, but yeah, if you were in health, home builders, Bitcoin, and uranium, you won this week, and we'll see if the momentum is still there. Bitcoin, there's like breaking news on the screen and everything. It just cracked through 64K. We'll see how it trades through the weekend. But Powell set off a lot of bullishness with his dovishness, and let's see what's next. Okay, so let me share the screen. My son is screaming upstairs because he didn't have a nap, and we're on vacation starting this weekend. Also shout out, thanks to Investopedia, letting me be the chart advisor writer of the week. That was fun. I'm a nerd, a financial nerd, and I thought it was fun, and I look forward to doing that. Might do it for the listeners here. I don't know. Leave a comment if you think that's something you want to see or something. All right, so here's the SPY chart intraday. So Jerome made his comments here at 10 a.m. I feel like we're going to get a there. At 10 a.m., this is where he spoke, and this is where he essentially peaked. Things started looking a little bit nasty, but they really sold it off around the European close, 12:30. And then it really recovered very well in the 1:30 p.m. You see the orange lines, the VWAP, what we look for, the volume-weighted average price. And we almost actually struck new highs towards the end of the session. Zooming out, so when I have my cycle work, the accumulation phases and distributions can always be a little bit off because you can always, push more reps out, as it were, to point of failure. So what happened here is, so we had the 20th, and it's pretty much 20th to 23rd. Today's the 23rd. We're getting higher and higher to this band. You are getting some expansion. Today was a big input. It looks like we're going to be, let's see if we're drawn to this July 16th all-time high. We're very close. We're at $3 or less than 1% away. It's about 25 bips at this point, a little bit less. At this point, a lot of momentum is pulling it. You don't want to be the first one, to short this here. But I still, it's very strong trajectory. I don't think it's going to do it, but it very well may when you have financials, healthcare, industrials hitting all-time highs. These are the engines. If you get NVIDIA, Apple, Microsoft, bid, and Meta bid hard on Monday, then this is obviously going to go through. So it depends if you get that participation from that part of the, that high beta part of the market. That's where we are on SPY. Still, longer term, 2 to 3 weeks, that correction that will get us probably to just 547 or so. So still amazing buy points. I mean, you don't want to be the first person to short this market. This was a V-shaped recovery. Look at how short this lasted under support levels. Less basically a week of trading. By August 13th, that whole discount was gone. So very resilient market. So good to be long. Okay, so let's take a look at what moved today and what it means in the bigger picture. We highlight ITB. I'm happy to see that a lot of the movers today is a lot of stuff I wrote about this week, meaning I covered, actually meaningful, impactful, market moving stuff. So ITB, I said this one still has room to go. About, I think it was like Tuesday. It was at 115. I said it's probably going to 123. We closed at 123. I'm not, Harry Potter, as my son would say. He's outside. But that's pretty much where it's going to go. Because of the momentum, look at the strong candle. Unbelievable. And you're getting expansion. And the 52-week high is basically at 124 even, I'll call it. It'll get very close. It might do it. Similar to my stand on the S&P. This has a lot of momentum, so I don't want to be the first person in a theater saying fire, So I think it may do it, may not. But this is getting a little bit overdone. If it were, this is a little blow off top. You see how much it gets away from the moving averages, even with volatility expansion. This was crazy days here in July. It doesn't get too far removed, so you need a little bit more expansion. But beautiful slope, overbought most recently in July. But I think this one visits 115, within 3 weeks. So. But great trading. This is what killed it. If you were to sneak out one trade on Powell, it was home construction this whole week. So emerging market bonds. This is interesting. People don't usually look at this. So this is again emerging market bonds. Prices, inverse relationship. So prices lower, yield is higher. So what happened here? This shot up in price today to a new 52-week high, meaning yield is the lowest. Rates obviously dropped here, and. So we have the 52-week low back here on October 19th with a lot of the other global markets. And then as we started to become overbought, hey, buddy. All right, I'll see you. I told you, I had a feeling. So here we started holding the 200-day moving average, November 20, right around Thanksgiving. And this has been a nice descent. It was range bound essentially all the way up until 90, and really around the Japan crash. Tried breaking out, and then really just this past week, we had started really some ascent. So this is interesting. So when you see this kind of pattern, this can really start to lift after it based essentially for 8 months. It's a bond ETF, though. You can see the scale on here, 90 at the top, 80 at the absolute bottom. That was basically a year's travels. But interesting to know, and you'll see this in a lot of the charts, that some spaces have been basing for about 6 to 9 months, and now they're going upwards. I think with the rates coming, I remember when a friend asked me a little while ago, what's the best time to get long in the market? And kind of to me, from everything I've known, 6 to 9 months before the Fed cut rates, you want to start buying stocks. And I'm just thinking now, if they're going to hike in September, probably should have bought and, started sniffing to buy, around March-ish and January timeframe. You would have been really good buys in the SPY. Pretty much works. Obviously, there's other factors, and there's an AI premium to the market, obviously, and it's concentration, but there's breakouts in areas, and that's what could be a lot of fuel. And I still stand by the 6,000 S&P by New Year's Eve. Nothing's changed in that. All right, so it's interesting to look at this. Let's look at another space, the KRA. So this is the regional banks. So this one is trying to chase its 52-week high. They did that in July before the Japan crash. This looks like it still wants to go a little bit higher, maybe just about another $1 to about 58.70, literally at the top of this band. So just inside its 52-week high. Keep on getting that impression from a lot of the charts. So that's what overall, like I said, no bias. Look at the charts objectively. Lets me see that, we'll come within a rock's throw and then go lower. But, this is not perfect, obviously. So, yeah. But yeah, I think it has a little bit to go further before over the next couple of weeks, reversing back to about 54 bucks. All right, we still have a couple more. Let's look at the chart of uranium. I've wanted to look at this one. I did not get to look at this before the program. So let's take a look at what happened. So we had said back here, when did it start to fall? Right here, July 18th. We said it has till August 18th or so, from what I've seen, to regain its 200-day moving average, and ideally that it's flat and it's not really starting to go lower. Look what's happening with uranium. The 200-day moving average is starting to go lower, and so August 18th was here. It's tried. This is not like an exact science. It's trying. You got to see where this goes. I think that's about it. And at most, I'm looking at other levels here, maybe 27.5 to 28 absolute tops. So for it to regain this, I'm not saying I just quit on it, but it's got more time to put in, more work to do. It hit actually 22.79 the day of the Japan crash. Now it's up 10% from there, up 7% today. I'm sorry, it was 23 then and 27 today. So it's got some more work to do. I think it's going to impressive move today. But I think this is going to go back to 26. even in about 2 weeks, in 2 weeks' time. And then let's take a look at VNQ, or the real estate ETF, which hit a 52-week high today, similar to the emerging market bonds fund. So big impacts, right, from Powell, what he says. So this is always crazy when you have, this is the most volatile group, but look how much, because the shoot up it's had, the advance it's had today, from how massive this candle is, it's above where the Bollinger Band stops, which is 93.66. So even if I were to raise it today, we still closed above that by about 80 cents or nearly 1%. So this one's getting a little bit overdone. A lot of exuberance over the prospects for real estate, literally because of cutting rates. A lot of potential home buyers now that were shut out potentially have a shot. That being said, I have a level about 94.25 ish on this. So this is just a little overdone. So over the next couple of weeks, I look for this to go all the way back to about 90, half to 91. It does have a lot of momentum, so probably closer to 91. But yeah, if you're in the real estate trade, congratulations. That's a great one. Okay, and then UUP, I usually don't cover stuff that's down less than 1%, but this down 0.85 for this is a massive mover. So bonds rip today has an effect on the dollar. So dollar goes lower. So we're not 52-week lows here, but we are at 5-month lows in the dollar. And, it's pretty steady. You look at the 200-day moving average. It was stuck for a long time at about 28.70. And you see where we're trading now, 27.96. I thought this would mean revert a little bit higher, but this keeps on, cascading lower. Still think you get a bounce to at least 28.20, which is basically where we were last night, before today's trading, over the next week, but more likely it move towards 28.5. And that would be the 200-day moving average. I see it reclaiming that over the next 2 weeks. All right, let's look at the next top 5 gainers of the past 5 days. No repeating charts. So XHB is a little bit different. We'll look at the home builders. This is up 8.1%. So this is actually the best trade. I was speaking before about the best trade for Powell. Real estate, it was closer than not. It was home builders. So, I mean, this is 1, 2, 3, 4, 5 days of trading. We opened then at 111 on Monday morning at 9:30, and right now we close at 119. $8 in 1 week, or 8% nearly, is pretty good. So now what? I had a 120 ceiling on this. That's pretty much where it is. It's $1 away. So I think because of the exuberance and a good looking candle and the vol expansion and the chase of its 52-week high at 121, I think it'll try and pursue that very close. But yeah, great looking chart. And then it's going to descend towards 111, 112. There's going to be some give back of this strong rally. All right. IBIT. So Bitcoin, like I said, is trading 64K right now. It just cracked through. Let's see where we look at this chart. Obviously, it looks pretty messy and kind of range bound with lower lows. So now what? It's really done a good job. This was an outlier, basically, this Japan craziness, and then it bounced back nicely. I think you kind of need the breakout in the overall markets for S&P, over 56, over 565 for SPY, for this to really get ground and break above 34.5, and really hold it. Yeah, I don't know. I'm not just seeing a ton here. I'll be curious how Bitcoin trades all weekend. This really needs, I think, a breakout in the beta markets and just overall animal spirits taking over. It's done a lot of work from 28 to 36 in 2.5 weeks. It may reach 38, 39, which would be an amazing weekend, 10% further from here. So for Bitcoin, that would be reaching 70K by Sunday night or Monday morning. I don't think that's impossible just because of volatility, but I think this ends up in 2 to 3 weeks around 34.5. So I don't know, enjoy it while it lasts, but All right, the third best gainer, uranium, up 5.5% basically. We pulled up that chart already, so we're going to skip that. ARC is number 4, up 4.9%. So that had a very good week. I think it had I think it was Roku was up big, and then Tesla had a nice couple of days. So now what? So yeah, this looked like an accumulation mode away from 43.75. I said it's going to probably be magnetized. Average of 46.40. Look at where we are today. I think it might have a little bit more. Usually this candle doesn't just get stopped in its tracks. It might get close, but it's going to run to a brick wall at 46.40. And such a bullish market. If I'm desperate for shorts, I don't like that to rise in 200-day moving average, and it's looking at a potential What would that be? A 6-month breakout at 49.40. This thing can move $2 today. But something I look forward to because I had this level of resistance set. It hasn't really been able to hold this with strength going back since tax day here on April 15th. So I think this one revisits about 43.75 to 44 over the next 2 weeks. So I might put the other put spread based on that if I'm looking for shorts. I don't know why I just started slurring there. And the carry, we already looked at this one. The carry up 4.8% in the past 5 days, absolutely crushing it. Let's look at some of the losers. They've been hard to find. Mexico down 3% this past week. It was up 2.5% today, and it's still net down 3%. So let's take a look. This one, like I said, did a lot of work on 52-week lows off Japan from essentially 51 all the way to 57.5 in a short amount of time, literally 11 days. Now what? This is just a weaker area. There is a global bullishness, but I think this one trades lower to about 52.20, so above the 52-week lows. But I think this one's on its way low. I think it gives back today's session and then some over the next 2 weeks. All right, let's look at nat gas. Nat gas has been interesting. We didn't perfectly trade this one. I want a perfect setup to get paid for being short anything in this market. Today it was down 0.6. So now what? I think if you got in here for the shorts, these are your 3 opportunities, really. The 19th, 20th, and 21st, when you had these closes around 14.5 each day, that was a good level. Now I do believe we are on our way for this seeing 12.35, very close to 12.35, which would be a new 52-week low for this in the next 2 weeks. Just hasn't been working in this environment. We're getting more of the same in the markets breaking out, and it's not broadening to a commodity usage like this. I just don't see it happening, holding like a reversal. So yeah, no. KWeb we wrote about, I believe, Sunday night or Monday. I know it was up 90 bips today. Let's see. So I think this is going to get sold off. This is a very heavy 200 moving average. Look at that. Just one day, August 19th, it closed above it and just dikembe'd like it has been pretty much for no more than 2 consecutive sessions since July 17th. So 6 weeks of data there, short, but just not a great looking group. 200-day moving average is flat, going up ever so slightly. Actually, I take that back, going down. Stuck at 26.99. Now what? I think this goes towards 20. I think you actually get a little bit of vol expansion here. It looks like it's tightening. I think you get a little bit of expansion. I think this heads towards 24.80 over the next 2 weeks. So I'm just bearish to this group. It doesn't look good. Just don't love the way it's acting. Okay, getting short there. And then the 4th biggest loser this week. So KWeb was down 2.25%. The dollar is down 1.5%, and we already looked at that chart. So again, best 3 absolute trades of the past 5 days: long XHB, long home builders, long Bitcoin, long uranium. Best 3 absolute trades of the past 52 weeks. We always do this on Friday to see what has really changed big picture. And go figure, long Bitcoin, GBTC specifically, is still the best trade in the past 1 year. And we're literally talking about Bitcoin, breaking out today. So let's look at the chart. We don't usually do this, but we'll do this. So a tough time for Bitcoin, honestly, ever since right before the Japan crash, specifically for the GBTC, which is the best returning ETF of 180%, we'll call it, since last, August 23rd. And just because of today's session, essentially, we're now closing with gusto above the 200-day moving average. Yesterday it closed below it, and today we closed above it, with strength due to the breakout of Bitcoin above 64K. So looks great. You gotta love seeing when the best performer of the past year is also having. We just said I had the 2nd best week of any ETF. So you gotta stay along Bitcoin. I bought, not to count myself on the shoulder, but I'm glad I bought something on August 5th. I bought Bitcoin here, and I bought the S&Ps there the Friday before. So I'm glad. If you did any buying there, you should congratulate yourself. You got like maybe 3 chances this year for really super on sale, discounted securities, and that was one of them in August. Okay, the SMH. We did not look at this chart yet. SMH is the 2nd best trade of the year. So GBTC is up 179 rather. SMH is up 62. Okay, so you think of the crazy volatility of Bitcoin, think of the crazy volatility of NVIDIA, which is the major holder of SMH, and then risk adjusted. Look at the returns, right? Almost 3 to 1. So SMH, now what? Obviously, it's doing very strong. We were highlighting earlier in the week. It didn't break out today or anything on the Powell move. It had a great move, up 2.5%. Now what? We said in the article it might reach a little bit more bullishness of 250, 255. It literally hit 250, 220. So I just, kind of freaky. But yeah, I see this going to about 241 over the next 2 weeks. I think it's had a great, marvelous week. Low to high, and actually it's getting back a bunch. But yeah, I see a move towards 241 or $7, get back about 3% and change over the next 2 weeks for this group. But yeah, and look at the slope of the year. Looks great. I think this group, the tech group, is going to be the one that leads the rally when we get it in mid to late September. And I think these will get broken, the July highs of tech. And then VXX, we didn't look at this chart yet. Nope. All right, and then VXX, the best absolute third absolute best trade of the market, down 53% if you were short from last year to now. So look at this chart again. What an oopsie! Just 4 closes above the 200-day, and now bang bang. All that being said, there is still some volatility in the environment. I wouldn't be shocked if you get another move towards 55, half 56 in this over the next 2 weeks. People start to digest the cuts and really start to worry about global expansion, especially in the U.S. in terms of the labor market getting any worse and such like that. So in closing, so I am going to be away on vacation with the visitor that was in here earlier. And yeah, we'll be away. So I will be back with videos on September the 4th. I would love to do, it's going to be exciting to do the recap video there, see where the markets are and everything else. I guess I'll look like, I'm not going to make any calls, but that's, 2 weeks away. But yeah, I'm still seeing a lot of bullishness in the market. I think it's going to cool off a little bit, and then you'll start to see a move towards around 547 to 550, say when we get back with these videos. We'll see. Here's the timestamp, August 23rd, 4:35 p.m. And I will enjoy the rest of your summer. Have some ice cream for me and never die and rock on. And thanks for joining. New subscribers and folks, you can expect stuff like this. Put stuff in the comments. Put tickers. I will do it. We'll do it live, like the Bill O'Reilly thing. But I'll do it live. You can do single stocks. If you want me to talk about Red Robin gourmet burger, you might need a new belt, but I'll look at the chart and we can analyze that too. I don't really care. I do everything the same. Technically, you could say if you're missing out on it, if it's a good time, so on and so forth. And maybe an options trade if you're a real nerd and we just want to lose money faster. Bye. Happy Labor Day and stuff. Bye.